Welcome to our deep dive into Tesla stock. I am excited to unpack these sources with you. It's clear you're already pretty savvy about Tesla, but we're going beyond the electric car hype. This deep dive is all about assessing Tesla's stock performance, really getting into what's driving that valuation, and figuring out if it aligns with your investment goals.
What's fascinating here is that Tesla's become the symbol of the shift towards sustainable energy. And even tech, that's what makes its stock so interesting. It's almost a barometer for how investors feel about the future.
You've got that right. We're not just talking about sleek cars here,
Mhm.
but also their forays into solar energy, battery storage, and even artificial intelligence with self-driving. You've pulled some great research on Tesla's market dominance in the EV space. What stood out to you?
Well, one of the reports you shared highlighted how, despite all the new competition popping up, Tesla has actually increased its market share in the U.S. this past quarter. It's a testament to their brand power and how they've really captured that luxury EV image.
That's a great point. And speaking of image, their stock chart definitely looks like a roller coaster ride. It's had some incredible highs, but also some stomach-churning dips. So let's dive into the numbers from their latest earnings report. You flagged some interesting data points there.
Yes, if we look at revenue, Tesla's firing on all cylinders. They beat analyst expectations, with strong growth in both vehicle sales and their energy business. What's particularly impressive is their profit margin. It's significantly higher than many traditional automakers, which suggests they've got a good handle on managing costs, even with all the supply chain headaches we've seen in the industry.
I was struck by the breakdown of their revenue streams, and it's not just about selling cars anymore, right? You've got vehicle sales, of course, but also the energy generation and storage piece, and then a growing services segment.
That diversification is key. It makes Tesla less vulnerable to the ups and downs of the car market. It's like they're hedging their bets on multiple aspects of the future.
Okay, but we can't just talk about revenue and profits. To really understand Tesla's stock, we need to unpack how it's valued. You mentioned some financial ratios, things like the price to earnings ratio and earnings per share. How can those help us make sense of things?
Absolutely. Think of the price to earnings ratio, or PE ratio, as a measure of investor optimism. It tells you how much investors are willing to pay for each dollar of Tesla's earnings. Now, Tesla's PE ratio has historically been sky high, which means investors are betting big on their future growth. It's like they're saying, we believe Tesla's going to be worth a whole lot more down the road.
So a high PE ratio isn't necessarily a bad thing?
Not at all. It can be a sign of confidence in the company's potential, but it also means the stock price is already factoring in a lot of future growth. Any hiccups along the way could send the stock tumbling.
Got it. So it's a bit of a high risk, high reward situation. What about earnings per share or EPS?
EPS basically tells you how much profit Tesla's making for each share of stock. Now, you've highlighted some analyst reports that suggest Tesla's EPS is projected to grow significantly in the coming years. That kind of growth projection can fuel investor enthusiasm and drive the stock price higher.
Okay, that makes sense. But Tesla doesn't operate in a bubble, right? The overall economy plays a huge role in how any stock performs. You've gathered some articles on how factors like interest rates, inflation, and the possibility of a recession could impact Tesla.
Exactly. Think of the economy as the backdrop for Tesla's stock performance. When interest rates go up like they have recently, it makes it more expensive for companies to borrow money for expansion. That can put a damper on growth plans and make investors a little skittish.
And inflation doesn't help either.
No, because it erodes consumer purchasing power. People might think twice about buying a new car, even a Tesla, if their wallets are feeling the pinch. And then there's the looming fear of a recession, which could really shake things up in the stock market, including Tesla.
You mentioned government policies earlier. I'm thinking specifically about how different countries are incentivizing electric vehicles. It seems like those policies could be a major driver for Tesla, right?
You're spot on. Those government incentives like tax credits or subsidies can really juice demand for electric vehicles. And you flagged some research on how changes in those policies, especially in key markets like the US, China, and Europe, can create a lot of uncertainty for Tesla investors.
So it's not just about what's happening inside Tesla. The external environment plays a massive role in how their stock performs. What about internal factors? What's going on within Tesla that might influence its stock price?
One of the biggest internal factors is Tesla's ambitious production and delivery targets. You've highlighted a report that suggests they're aiming to produce a record number of vehicles this year.
Yeah, I saw that. It's a really aggressive target. But meeting those goals is crucial, right?
Absolutely. Hitting those production numbers demonstrates that Tesla can scale up and meet the growing demand for their vehicles. If they fall short, it can shake investor confidence and send the stock price south.
It's all about execution at this point.
Exactly. Investors are watching closely to see if they can walk the walk, not just talk the talk.
And let's not forget about all the cool new stuff they're working on. New models, advancements in their full self-driving technology, and new energy products. It's almost overwhelming. But these innovations are what get investors excited, right?
Absolutely. Tesla's constantly pushing the boundaries,
Hmm.
and investors are trying to anticipate what those innovations could mean for their future revenue streams, the potential of self-driving cars, the widespread adoption of their energy storage solutions. These are the narratives that can really drive Tesla's stock price.
It's like betting on the future, really. But speaking of the future, I'm curious about the roadblocks Tesla faces. The competition in the EV market is getting fierce. You've got some insights on that, right?
It's definitely not a one-horse race anymore. You've got established players like Ford and General Motors pouring billions into their electric vehicle programs. And then there's the rise of Chinese companies like BYD, which are becoming major forces in the global EV market.
So how should we think about this competition from an investor's standpoint? Is it a threat to Tesla's dominance?
It's certainly something to keep an eye on. You've highlighted an analysis that suggests Tesla's market share could erode in the coming years as these competitors ramp up production and introduce new models.
It makes sense. More competition means more choices for consumers, and that could put pressure on Tesla's pricing power.
Exactly. And it's not just about competing for customers, it's also about competing for resources. Tesla, like all EV manufacturers, needs access to key materials like lithium for their batteries. You've included some research on the challenges of securing a stable supply of these materials at a reasonable cost.
Yeah, I found that really interesting. It seems like the price of lithium has been all over the map lately.
It has. And that volatility can directly impact Tesla's profitability. If the cost of raw materials goes up, they either have to absorb those costs or raise prices, which could hurt demand.
The delicate balancing act.
And then there's the elephant in the room, Elon Musk. You've included some articles that discuss how his involvement in other ventures, like SpaceX and X, formerly Twitter, can impact investor perception of Tesla. He's a fascinating figure, isn't he? A visionary entrepreneur, but also a bit of a wild card.
He certainly keeps things interesting. Some investors view his other ventures as distractions, arguing that his focus should be solely on Tesla. Others see his involvement in these cutting-edge companies as a testament to his brilliance and a sign that Tesla will continue to innovate.
So it's a bit of a double-edged sword. His star power attracts attention and investment, but it also creates uncertainty. It's a lot for investors to weigh. Okay, so we've talked about the challenges, but let's shift gears and talk about Tesla's potential. You've highlighted some research that paints a pretty optimistic picture of the future for electric vehicles. The global demand for EVs is projected to explode in the coming years. And Tesla, with its established brand, its technology, and its global manufacturing footprint, is well positioned to capitalize on this trend. You've included some data on the projected growth of the EV market in key regions like China and Europe.
Yeah, those numbers are pretty mind-blowing. It seems like the world is finally embracing electric vehicles in a big way.
And Tesla's not just an automaker, it's a technology company. Their expertise in battery technology and energy storage could give them a significant advantage as the world transitions to renewable energy.
I was particularly intrigued by the reports you shared on Tesla's energy storage solutions. It seems like they're aiming to be a major player in the clean energy transition.
They are. Their home energy storage systems like the Powerwall are becoming increasingly popular. And the utility-scale battery projects like the Megapack are helping to stabilize the grid and integrate renewable energy sources. It's a fascinating aspect of their business that often gets overshadowed by the car side of things.
It seems like they're really thinking long-term about more than just selling cars. They're building an ecosystem.
Exactly. And then there's the potential of autonomous driving. If Tesla can perfect self-driving technology, it could revolutionize transportation and create massive new revenue streams.
I remember that article you shared about their robotaxi ambitions. Imagine a world where fleets of self-driving Tesla taxis are ferrying people around cities, generating revenue 24/7. That's a compelling vision, but also a challenging one, right?
Definitely. There are significant technological hurdles to overcome, and the regulatory landscape is still evolving. But the potential is there.
Okay, so we've covered a lot of ground here. Tesla's market position, financials, the factors that can influence its stock price, the challenges, and the opportunities. But let's get to the heart of the matter. Is Tesla stock right for you?
Well, let's look at the arguments on both sides. The bull case for Tesla is compelling. Investors are excited about their growth potential, their cutting-edge technology, and their strong brand recognition. They're seen as a leader in a rapidly growing industry, and that's attractive to many investors.
It's like they're the Apple of the car world, right? People love their products, and there's a certain coolness factor associated with owning a Tesla.
Exactly. But on the flip side, there's the bear case. Tesla stock is notoriously volatile. It can swing wildly based on news sentiment or even just a tweet from Elon Musk.
Yeah, I've seen that firsthand. It's definitely not for the faint of heart.
And their valuation is still very high. Some investors argue that the stock price is already baking in a lot of future growth, which means there's limited upside potential and a lot of downside risk if they don't meet those lofty expectations.
So it's a high risk, high reward kind of investment.
It is. And you have to be comfortable with that level of risk. It's important to remember that the stock market is inherently unpredictable, especially when it comes to a company like Tesla, which is pushing the boundaries of innovation and often operating in uncharted territory.
So how should someone approach investing in Tesla, given all these factors?
If you're considering investing, it's essential to think long-term. Don't try to time the market or make quick gains. Instead, consider a strategy like dollar-cost averaging, where you invest a fixed amount of money at regular intervals. That helps mitigate some of the volatility.
And diversification is key, right? Don't put all your eggs in one basket, even if that basket is a shiny Tesla Model S.
Absolutely.
Yeah.
A well-diversified portfolio can help balance out the risks and rewards of investing in individual stocks like
Okay.
Tesla.
So what do the experts think? You've gathered some analyst reports on Tesla. What's the consensus view?
Analyst opinions on Tesla are all over the map. Some have a buy rating, some recommend a hold, and others even suggest a sell.
So how should we interpret these conflicting views? It seems like even the experts can't agree on what Tesla is worth.
It highlights the complexity of valuing a company like Tesla. They're operating in a rapidly changing industry, and there's a lot of uncertainty about the future. It's important to understand that analyst ratings are just one data point.
Right. It's not like they have a crystal ball.
Exactly. It's important to do your own research, look beyond the headlines, and understand the company's fundamentals before making any investment decisions. Don't just blindly follow the herd.
And I imagine investor sentiment plays a big role in Tesla's stock price, right? I mean, it's a hot topic on social media, and all that buzz can create a lot of hype, which can sometimes lead to irrational market behavior.
Absolutely. Tesla is a bit of a social media darling, and that can amplify both the positive and negative swings in sentiment. It's like a roller coaster ride sometimes.
It sounds like with Tesla, you really need to have a strong stomach and a long-term perspective. So let's do a quick recap of what we've uncovered in our deep dive into Tesla's stock.
We began by examining Tesla's dominant position in the electric vehicle market and their remarkable growth trajectory. We then dug into their recent financial performance, noting their diverse revenue streams and healthy profit margins, which are pretty impressive, especially in the competitive landscape they're navigating.
We also spent some time discussing the various external forces at play, things like the overall economic climate and government policies that incentivize electric vehicle adoption. We explored how these factors can significantly impact Tesla's stock price.
Right, and we didn't shy away from the roadblocks either. We talked about the intensifying competition from both established automakers and rising Chinese companies. We also discussed the challenges of sourcing raw materials for their batteries and how those fluctuating costs can impact Tesla's bottom line.
And of course, we couldn't ignore the Elon Musk factor. We talked about how his leadership, his vision, and even his involvement in other ventures can create both excitement and uncertainty for Tesla investors.
We then explored Tesla's immense potential, their leadership in battery technology, their plans for global expansion, and their ambitious vision for a future driven by sustainable energy and autonomous driving. It's clear they're aiming to be much more than just a car company.
We also tackled the big question: is Tesla stock right for you? We examined both the bull and bear cases, highlighting the importance of aligning your investment decisions with your personal financial goals and your tolerance for risk.
And we wrapped up by looking at what the experts think, acknowledging the range of analyst ratings and the influence of investor sentiment, which can be pretty wild with a company like Tesla.
This deep dive has really driven home the point that investing is a personal journey. There's no one-size-fits-all answer when it comes to Tesla or any other stock.
Exactly. It's essential to do your own research. Consider seeking advice from a financial professional if needed, and most importantly, invest wisely.
As we conclude our exploration of Tesla, I want to leave you with one final thought-provoking question. We've talked a lot about Tesla's role in shaping the future of sustainable energy and transportation, but with technology advancing at such a rapid pace, what could potentially disrupt Tesla's trajectory? What innovations or market shifts could emerge that might challenge their position as a leader?
It's a question worth pondering. The future is always full of surprises, and the landscape can change dramatically in a very short amount of time.
Thanks for joining us on this deep dive into Tesla stock. We hope you found it insightful and engaging. Until next time, keep exploring, keep learning, and keep investing in your knowledge.